What's up, everybody? This is Jadrian, the home locator, aka your favorite realtor. Just want to say thank you for the support that you guys are showing. Before we start this video, I want you guys to share it, like it, and subscribe. Once again, share, like, and subscribe. Thank you. We out. Watch the video. What's up, everybody? This is Jadrian, the home locator, and welcome to another episode of the Home Locators community. Today, I have a very special guest, someone who graduated from Texas Tech, class of 2004. He's been working as a loan officer since 2005. Mr. Ryan Miles. How you doing, sir?
I'm good. How are you?
I'm doing fantastic. I want to get right to it, though. What made you get into mortgage lending?
That's a good question. So I actually was going to look to get into the oil and gas business with my dad, but my brother-in-law was in mortgage lending, and he said, hey, before you go down there and get in with those sharks, he's like, let my buddy give you an interview and bust you up a little bit. And so I was like, all right. I was like, I'll get my feet wet and at least get an interview done. So went and met with this guy, and it just like seemed like a really, really nice guy. And I was like, this seems pretty cool. Honestly, I'm interested. The more I talked about it. And he made me an offer that night. And so then I told my dad, and he said, do it, see what, if you want to do it, check it out. And then worst case, we'll figure something out for you. So that's how it happened.
So with your dad, how did he feel about, you going ahead and following that dream?
He was good until the big crash, happened.
Yeah.
And then he was worried about
Oh, yeah.
But I've made it since, so, that just shows, the resiliency. But it was definitely like a touch and go there period, I think, for everybody in the mortgage business.
So, and this last question on that, what is the similarities between that and what we're going through now? Like the transition of the market?
I kind of feel like it's tougher right now. This past year has been tougher than it was during that time, just because there was still business back then. It just really, really slowed up so much last year that, I felt like that was tougher. But I do already see it improving, and I feel like that we're getting that behind us. So we should be good going forward.
So, I just want you guys to know this is the guy that is going to be helping me on a lot of my transactions. So when you see me in a real estate transaction, you're going to see him. So just so you guys know, this is my guy. He is really good at what he does. So, get familiar with him.
I appreciate that.
Yes, sir.
And you're
yes,
the man
sir.
as well.
Absolutely. I try to be. So moving along, what is the first steps that someone should consider when buying a house?
First step someone should consider is definitely reaching out and getting the whole loan application done, kind of figuring out where they stand for the mortgage process.
Okay. So is there any, because a lot of people kind of overcompensate on that part.
Sure.
So how does someone that is just like, okay, I want to go ahead and do it, I have my funds here, but if they buy a car, anything like that, is there anything that you would want them to kind of back away from?
So during the initial process, we want to look at everything that they have in their current situation, and then we can advise and coach them on what's best or how to improve their scenario or what options that we have.
Okay.
So, really, before they come to us, there's really no pass or fail or anything like that. That's the best part about the loan application. It's just getting the loan application done. That way it allows you to know where you stand. And then we always tell people to do it in advance. The second you think about buying a home, if it's 6 months, a year away, do it now. Then that way we can have everything, if there is anything that needs to be done to prepare or to save up money, or whatever the situation is, you have time, and then you know what you're up against.
So does that kind of blend into the fact that they have to have funds in this account, or whatever account that they're using to put down payments, anything like that, or is that kind of different? What is the difference between the two?
Yeah, so in terms of the money for closing, there's a couple options. A lot of loan programs allow for a gift from a blood relative, so they could get a gift, so they don't have to have the funds.
Okay.
Which is a good option. But in terms of just actual what we look at for funds, we go off the last 2 months' bank statements for funds. So as long as their funds have been situated in there for 2 months, then that's what we're going to go back on.
Okay.
So it just kind of depends on, like I said, if they get to us early enough, then, we can help them with, what they need for their particular scenario.
Okay. So the financial preparation, what should some individuals, kind of be prepared for when they're making this big jump? Of course, obviously buying a house, but what is it set in stone that they should do moving forward, like from the jump?
Yeah, from the jump, just really, like I said, just getting that loan application done. Obviously, trying to save up, at least as much as you can, during the time before. But it's really not going to be an issue if they don't have all that prepared up in front, because a lot of people don't know. Until you go and talk to somebody, unfortunately we don't learn about buying houses and credit and everything in school. So so there's really nothing crazy that they need to be trying to doing, other than just knowing that they are going to have a down payment for the majority of loan programs. There are some government assistance and type of things like that, or VA for no down payment. But there's going to be some closing costs and things associated with it they need to have settled up.
So with your dad, how did he feel about you going ahead and following that dream?
He was good until the big crash happened. And then he was worried about but I've made it since, so that just shows the resiliency. But it was definitely like a touch and go there period, I think, for everybody in the mortgage business. So
and this last question on that, what is the similarities between that and what we're going through now, like the transition of the market?
I kind of feel like it's tougher right now. This past year has been tougher than it was during that time, just because there was still business back then. It just really, really slowed up so much last year that, I felt like that was tougher. But I do already see it improving, and I feel like that we're getting that behind us. So we should be good going forward.
So any misconceptions that people should be aware of? Because when this market, either booms or whatever, what is the most common misconception that people have when trying to buy a house and thinking that they can buy a house, but they don't know if they can or not? So
I think one of the biggest misconceptions is people often will look at websites that'll give them maybe just the principal and interest payment. They may not know, the taxes, the insurance, a lot of things that are going to go into it. So, diving down to what all is needed for the money, at closing, what's all in your payment, what can they comfortably afford. A lot of people, may feel that they could spend their whole paycheck on a house, even though that's, so it's just talking through them on setting the right expectations of where they can qualify for and what's best for them.
So how important is it to understand, for people to understand their credit score when they're applying for a mortgage from the jump?
Credit score, it's definitely one of the most important things. So we gotta credit qualify in order to have options. So a lot of the information that we can get on credit scores are called consumer credit reports. They're not going to be as accurate and often real time as a mortgage credit report. So there's a lot of things that go into the mortgage credit report that sometimes aren't in the consumer credit report. So they want to make sure that that's another reason, as soon as they know buying a home, let's get that mortgage credit report pulled, because there could be a collection or something. They feel they have an 800 score and they really have something in the low 500s, whatever the situation is. So the quicker we get that, and able to tell them, there may be, the time to work and fix it and that sort of thing.
What about people that have bought a car? Let's just say someone bought a car and it shows up on their credit report, or let's say somebody just went all out of their way to buy a car right before closing. Is that anything that messes up
Hopefully they told their lender.
Yeah, that's exactly.
Hopefully they told their lender.
Yeah.
So buying, we tell everybody during the mortgage process, no inquiries, nothing.
Yeah.
If you're gonna inquire about doing anything, we need to know about it and see if we're gonna be able to make it, not impact them.
Okay.
So definitely during the mortgage process, limit purchasing anything like that, anything on the credit. Also, if you're going to sell something or whatnot, all that is information that you always want to be as transparent as you can with your lender, just so we can help navigate through the process.
Okay. Moving along, what role does pre-approval play in the home buying process, and how does it differ from pre-qualification?
So pre-approval is going to be, we take the loan application, we get their documentation, and we run it through not only automated underwriting, but actually through an underwriter.
Okay.
So a pre-qualification is getting their application, getting all the documentation, and just running it through the automated underwriting system yourself.
Okay.
So while a pre-qualification is good, it's just having that extra set of eyes on the pre-approval to ensure that they're ready to go, is kind of the main difference there.
Okay, and I know that, when buying a house that you're going to have issues as far as roadblocks, anything that they have to overcome. Is there any advice that you can tell people, or just have your own scenario about roadblocks that you're going to potentially run into? Because it takes 30 days to close a house on a perfect situation.
Sure.
So I know there's things that could make it 60 days or whatever the case may be. So what is some things that you can overcome?
The main thing is just follow your lender's instructions, and like I said, just be transparent, because the more information that we have, the better the application is up front. Everything is divulged, all the information is there. It's a lot easier for us to have a seamless, smooth process for the client, and just getting information back quickly. That's kind of, a big thing. If we ask for something, get it back as quick as you can. That way we basically can keep it moving.
Okay. And as far as the information that you're going to give to realtors, how much of the information that the realtors need to know as far as anything that has to go with their personal information? Obviously, you wouldn't tell them personal information, but just to keep them on top of everything, what is it that you're communicating to realtors to stay on top of everything that they need to do? Yeah.
So if there's ever, any type of dragging their feet, that sort of thing, we're always going to loop the agent in. And then we're always going to give updates on status updates, like the main things.
So it'll be like an email.
And we also have an app. So we'll be kind of checking things off the list. And so as we get the appraisal in, that sort of thing, we'll go ahead and notify you, that sort of thing. When titles received, that sort of thing. Everything comes in that we're ordering. As the process moves on, we'll let you know when it's, clear to close and ready to go. Okay. If we want to close early, that sort of thing.
As far as affordability, budgeting, and making sure that they can afford it, just in general, what is it that you can determine as far as, let's say, we talked about it earlier, let's say someone they get approved for $1 million house.
Right.
And like you said, you wouldn't want to, if you can, if you don't, then I wouldn't do it, but if you do get approved for $1 million house, how do you determine and sit down with them, okay, you get approved for this, but let's make the right decision?
Sure.
Like, how does that?
Yeah. So I think a lot of people, they like to know kind of that max that they can qualify for. It's just something that they want to hear. But it's always best, for me, to let someone know that it's kind of like putting your dad hat on. There may be things that come up in your life that you're going to need to pay for, right? You may all of a sudden decide that you're a Dallas Cowboys fan, you want to get $1,000, suite or whatever, whatever it is. All these different things that could come into play in your life, kids, whatever. You could have a sickness. There's lots of things that are unexpected. So I try to encourage people to not go for the absolute max that they can qualify for. But I just like to let them know, here's the options, that sort of thing. And if they want to do that, then that's up to them. But I like to at least educate them and say, hey, keep in mind that some other expenses may come up. The last thing you want to be is, not be able to afford to eat and you're, paying for your home.
Have you had anyone that's just like, I'm doing it anyway?
I mean, there's been a couple, out of there's a lot, but, out of the majority, no, but there's been a couple that they unfortunately, I've had one that, they ended up having to sell it because they couldn't afford it. So, yeah.
So as far as people that are having to sell their houses, and I know this is kind of off, but if they have to sell their house and they can't really afford it, does it have to go immediately? How does that process go? Because I know if you can't afford it, and you live in it, you have to at least pay 1 to 2 to 3, whatever, how many months.
Right.
Like, how do people sustain that? Like, what is the process on that?
On like the foreclosure process. So, so they'll send some information, send some letters to you, and let you know that they're gonna be taking the home back, that sort of thing.
Okay.
But I've never got in detail on it just because I don't play that part in it.
Yeah.
But
I'm pretty sure it gets messy anyway.
Yeah, it's gonna get messy.
Yeah.
And so hopefully they can maybe sell the home or settle up before those situations happen.
Okay.
But definitely would want they would.
So what are the lesser known costs that go into a closing or anything?
Yep. So there's 3 things that go into the money that's due at closing. We've got down payment. So on FHA, you can do as little as 3.5%. Conventional, you can do 3% for first-time home buyers. And then 5, 10. Typically, we go in the 5, 10, 15, 20% down situations. So there's the down payment, there's closing costs, and then there's prepaid items. Closing costs are going to be majority fixed costs. And then there's a couple of those that are going to be catered to the loan amount price for the cost, for like the title policy. And then the appraisal is going to kind of differ depending on the size of the home, that sort of thing. But the majority of those are going to be fixed costs.
Okay.
And the closing costs. And then the prepaid items, if they have an escrow account, which is essentially like a checking or a savings account that's held with the lender, that the lender pays their taxes and insurance as they go forward. If they have an escrow account, they've got to have a few months taxes, a few months insurance set in escrow account that they'll be paid at closing of the prepaid items. 1 year's homeowner's insurance paid up front, and then the days of interest is in the final part of the prepaids. Okay. So closing cost, or down payment, closing cost, and prepaid items, the 3 things. And a lot of people, sorry to cut you off.
No, you're good.
A lot of people I find when I talk to them think that they just need the down payment. Yep. And so going back to the misconception is, a lot of people will think, in their head, they just need the 5%. So that's another good reason to get your feet wet early and talk to a lender and figure out what options you've got.
Okay. Yeah, that was exactly what I was going to ask, because a lot of people think, okay, down payment, 10%. Whatever, 10 to 20%, whatever. Yeah, that's what I'm gonna go with.
That's it. Yeah,
I'm pretty sure that's
unfortunately,
and that falls in line to the misconception. Yeah, like make sure you guys are talking to your lenders about every issue or every question that you may have, because you don't want any surprises. Surprises will prolong the whole transaction and it may not go through. So just make sure that you're on top of everything. The lender's gonna make sure that you're on top of everything, and it's gonna be a smooth closing. So. But yeah, Ryan's pretty great at that.
For sure.
So, last question I got: how does the environment that we live in, or just the economy in general, how much of a role does that play in the market? Let's just say a lot of people say that the election year is a competitive market. So how is that? Better words to say, how does that influence the market on the real estate side?
Yeah, the election.
Yeah.
It's definitely always going to be something that's going to swing things, just because there's always a lot of uncertainty which way it's going to go, that sort of thing. Yeah. The main thing is, with rates, kind of tiptoeing back into the misconception thing, a lot of people think that, the information that's out, with where rates are, that sort of thing, they always feel like rates come from, specifically from the Fed, and that sort of thing. And mortgage rates are derived by mortgage-backed securities that are bought and sold on the bond market. So everybody always hears the Fed funds rate. They always think that that's the biggest thing.
Yeah.
While it does play into it, it's not the biggest leading indicator of where rates are going, that sort of thing. But it is part of the scenario. But that's more of the overnight money that people borrow from banks for like auto loans, credit cards, that sort of thing. So the biggest thing is where the Fed funds rate is, for that type of scenario. But for mortgage-backed securities are going to be the big thing. So it kind of just depends with what, obviously, that plays into the market. And it's always, the election year is always going to be something that's going to throw something in there. So hopefully it will be for the best this year.
What do you consider I have a lot more questions, but I'm going to kind of slim it down. My bad. But how many, what would you say is a competitive market as far as, just in general?
Like rates?
Yeah.
I mean, honestly, when I bought my first house back in 2009, I got 6.5 and I was doing backflips. So, I mean, for me, I think a lot of people that have seen these rates, that when the government stepped in and bought these rates down to so low, that it's hard for a lot of people to give up a 2.5-3% rate, right? Yeah. And I think that's one thing that's hard for them that we haven't had to deal with, right? Because back when I bought my house, that rates were coming down, right? So 6.5 was a good rate then. But in the grand scheme of things, I still feel like in the 5s is not a bad deal. A lot of people still may have a little bit of kind of discomfort with that, but in the grand scheme of things, we're not far off from what I think that we may be seeing,
going in the right direction,
and maybe sticking. I have a hard time believing rates are going to get back. So I just have a hard time. So I think we just need to set the comfort level, and this is probably where we're going to be going forward. Is they may come down a little bit, but the people that are waiting for 3-4%. I just have a hard time believing that we're going to see that anytime soon.
Do you think 2020 kind of hurt the market? I mean, it was, as a realtor, I wasn't a realtor yet, but everybody was selling houses. I'm talking like 5 to 6 houses every other month. It was wild.
Right.
But do you think that did anything to the market, like as far as?
For sure. Yeah. I mean, I think, COVID was a real thing. A lot of people died from it. It was terrible. I remember wiping down my groceries with wipes.
Lysol
wipes.
And
now when I think about it, I'm like, holy cow, we did that.
That could have killed me myself.
I mean, what are we doing? But in my opinion, did they need to do what they needed to do as far as they did? No. It's like, Jay, you go into the doctor, the doctor hits you on the knee with the hammer, and you do this big knee jerk reflex, right? It's the same thing, right? They didn't know how far they needed to go, so they pulled back as much as they felt that they needed to, and unfortunately, I think it went a little too far. I think that people could have afforded a little bit, more, but they just didn't know. It almost felt like the world was ending, and so mortgages are the dark horse of the economy, and whenever there's negative things like that, then rates are going to get low. So bad news is good news for rates. But do we want, as myself, I would prefer to not have, bad news, but that's just me, So. Well,
hey, that was a lot to digest, but I feel like that was everything that we could touch on for right now. I really appreciate you, because I sat down and learned a lot myself. So, but yeah, I appreciate you coming by today.
For sure. Thanks for having me.
Stay tuned for the next episode. We're out.
Thanks, guys.
You. What's up, everybody? This is Jadrian, your favorite realtor, the home locator. And I'm sitting here with Ryan. I appreciate you guys for checking out our video, but also want to say, if you have any questions as far as buying, selling, renting a home, or even just a vacation home, if you have any questions as far as real estate market-wise, you can reach out to me. And if you have any lending questions, I can reach out to Ryan, or I can just put his number and everything on it. He probably don't want that, but
no, I'm good.
I'll go ahead.
Feel free to do that.
Okay. I'll go ahead and put all the information that you would need to reach out to the both of us, and we'll take care of you guys. But I appreciate you guys for watching our video. And if you have any questions, please reach out. Thank you. We're out.
Thank you.